everyone. Thanks for joining us at MarketBeat Financial News and Analysis today. Consumers have been looking for bargains wherever they can find them, and dollar stores have been a big winner. However, as my guest Chris Markoch will explain today, those sales may not be delivering the earnings growth that investors want to see. Before we get into our discussion on dollar store stocks, go ahead and subscribe to our channel so you'll be alerted when we drop a new analysis. We're doing about 4 videos per week right now, so you guys are going to want to be sure to stay on top of those for news that could be affecting your portfolio. All right, let's dive into dollar store stocks here. Chris, why are the sales not delivering the earnings growth we want to see?
Well, first of all, thanks for having me, Laycee. Right now, it seems that the key word would be inflation. And on the consumer end, a lot of analysts were expecting that consumers would go to dollar stores and they would buy their staple items, but then they'd also buy their and then some items. And right now, what we're seeing is it doesn't look like consumers are really buying the and then some items. Let me give you 2 examples of that. Dollar Tree just reported earnings this week. The good news was they beat on the top and the bottom lines. That was great. But after jumping up about 10%, the stocks lost most of those gains because of the company's weak guidance, specifically in the area of earnings. They're saying on the high end of their new earnings guidance, it's probably going to be about 10% lower than the consensus estimate. And if you go to the low end of their guidance, you're talking about 17% lower. That's probably evidence of this earnings recession that many people are predicting. Dollar General had a similar story when they gave their preview of earnings on February 23rd. They came in with earnings estimates that were also probably about 10% lower than what the forecast was. That's even though they were showing that there was growth in market share for both consumables and non-consumables. So it's really just showing that the consumer is, yes, they're going to the dollar stores for their staple products, but those are low margin products for the dollar stores.
All right. But didn't I hear that consumers are shopping at dollar stores to beat inflation? Didn't you just write an article about how foot traffic was up at several big dollar stores?
Yeah. And I think dollar stores are seeing a rise in foot traffic, but that's not necessarily translating into the sales they want. I think when Dollar General previewed their earnings, they were saying like same-store sales were down about 10%. And that's not what analysts were originally thinking. But I think there's also, in addition to consumer inflation, there's also inflation that's affecting the store itself. One advantage that the dollar stores have always had is that they were bringing national pricing to remote locations where that wasn't always available. But that model only works because dollar stores have generally had more control over both their labor costs and their operations. We're in a different environment now in 2023 than we were in 2019. Dollar stores are like everybody else. Dollar stores are being forced to pay more the competitive wages that they need. So wages are up. And then also dollar stores have been in a period of expansion. I was hearing something where I think it's Dollar Tree is looking to build like 300 stores, just new stores this year. And Dollar General is expanding their pop shelf concept to about 200 stores this year. So that's a lot of pressure on the bottom line in a year when they don't need to have any more pressure on their bottom line.
Yeah. All right, Chris, are there any dollar store stocks that you would like or would like to own?
I don't own any. There's none that I would buy right now, but if I had to buy one right now, the one I would look at would be Dollar General. I know I'm going to sound like a broken record to a lot of our viewers, but again, it comes down to the dividend at this time for me. And similar to what I explained with AbbVie and with Domino's Pizza and with probably some other stocks along the way here, the dividend at this time, that dividend yield gives you a little bit of a kicker. So even if the revenue comes in less than expected and you don't get the share price growth you might have been expecting, that dividend helps make up that difference. For example, if I looked at Dollar General's earnings, and let's say right now, I think based on their estimate, they're coming in about 9%. So let's just say it gets worse than that, and their earnings are down 10% from what they were estimating. It still means that they're going to post about a 3% year-over-year gain in earnings. And earnings growth usually translates to stock price growth. And then if you can get a 1% dividend yield on top of that, which again, it's not a spectacular dividend, but if you get that little sweetener on top of it, that could help offset inflation a little bit. And that's what you're looking to do if you're an investor right now. You're looking for something that your total return is going to help outpace inflation.
All right, so it's Dollar General for you.
Yep.
All right, everyone, that is all we have for this one at the moment. Thank you for tuning in today. Let us know how we did if you would. Leave us a comment down below what you liked, what you want to see next. We always look forward to hearing from our viewers. And don't forget, you can try out MarketBeat All Access, try out our tools, see exclusive reports completely free for 30 days. Click the link I've included in the description below. Chris, thank you so much for your time today. I look forward to seeing you in the next one.
I look forward to it, Laycee.